Hi everyone, welcome back to Be Rich. It's Wednesday evening for you guys, and I want to tell you right now up front that I'm recording a whole batch of videos, which is for the next 6 days because I'm traveling to Bangalore, and I didn't want you guys to miss out on the daily videos which you guys are used to. So I don't want to beat around the bush. Yes, you will see me looking pretty much the same for the next few days. You don't have to guess and wonder, is Vinod not having enough shirts, or what's happened to Vinod where he looks the same in every single video? It's because I've gone ahead and recorded a batch of videos. So thanks for watching the video today, and do continue watching it. And Anand will be back from Saudi by end of the week. So I'm sure Anand and me, or Anand and Shashwat, or Anand, me and Shashwat will have something for you as soon as Gandhi Jayanti is over. The long weekend is over. That being said, today I want to talk about Charlie Munger and Charlie Munger's resilience, and why everyone loves Charlie Munger. Yes, we all talk about Warren Buffett. Yes, we do go on about Warren Buffett. But the big part of Warren Buffett is Charlie Munger. And I thought today I'll talk about Charlie Munger and what makes him so special and his investing strategy so special. The man is 99 years old, heading towards a century, and 1st of Jan, hopefully, touch wood, next year we'll be celebrating 100 years of Charlie Munger. Charlie Munger is known for his investing acumen. He is a symbol of resilience. He has faced personal challenges, including his son's tragic illness and financial hardships. But through all of this, he's persevered through all of this. And there's always been comparison between him and Warren for their ways. While Munger and Charlie have achieved success in investing, Buffett's early start and different financial choices led to a significantly different net worth. Munger chose to donate a substantial portion of his wealth to charities and impacting his overall wealth. So if you do compare, you should know this. Why do you consider Warren is this much and Charlie is not so much? This is because he's given quite a substantial amount of his money to charities. Challenges in value investing. Well, Munger expressed concerns about the increased difficulty in value investing long time back. Intense competition and availability of vast information online has made it harder to find undervalued stocks nowadays, and impacting potential for returns for investors. This is an age-old thing. You find a secret source of wealth, very soon the information spreads and everybody will be there. We can see this historically in the Klondike. When gold was discovered, everybody went rushing to Alaska. A lot of people lost their lives, but a lot of people achieved great wealth, so it spurred it on and on and on. Finally, when the gold dried up over there in Klondike, people stopped going there. The same is true with the oil. When oil was first found and oil was first struck, people bought vast tracts of land, and everyone wanted to be an oil man. And we know the story of Rockefeller, and we know when oil was discovered in the Middle East, how the face of Middle East changed overnight dramatically. From being ignored and thrown to the wayside, suddenly became a very important focal point for the world because of this vast reserves of oil. This is what happens in this day and age. It's even more, as to what Charlie says. Information spreads so fast and like wildfire. Even rumors spread like wildfire. As a value investor, it's getting harder and harder to focus on this. When we're talking about this, it brings me to this thing of what Eugene Fama and Kenneth French, two renowned economists and finance researchers, developed, known as the PharmaFrench three-factor model. This model evaluates stock returns by considering three factors, one of which is the high minus low, HML factor. The HML factor compares the performance of value stocks versus growth stocks. So Charlie Munger did not directly use the PharmaFrench three-factor model in his investment approach or publicly acknowledge using it. But the PharmaFrench three-factor model, developed by Eugene Fama and Kenneth French, is a quantitative model used to explain performance of various types of stocks, value versus growth. Based on the three factors, the market risk, size versus small large companies, and value, which is the book to market ratio, we can come to this. And Munger's investment philosophy, often associated with his business partner Warren Buffett, is rooted in value investing principles. Value investing focuses on finding this undervalued stock or asset and below their intrinsic value, which we all know about, and we have hammered this on and on in this channel and many other channels. While the pharma model considers value factors, its primary tool is for academics and quantitative investors to analyze stock returns. Munger and Buffett's investing approach relies more on qualitative analysis, including studies and fundamentals of a company, their competitive advantage, management quality, and economic moats they possess. They also emphasize on understanding the business they invest in deeply, which is very different from what I'm talking about in the pharma model. While Munger and may have been aware of this academic model, like the PharmaFrench three-factor model, his investment decisions were not directly influenced by quantitative models. Indeed, him and Buffett developed their own investing philosophy over the years, which is more focused on qualitative analysis and long-term value-oriented approach. So, stock values. These are companies whose values are much lower than market price or market value. The shares prices being sold in the market is much lower than their intrinsic value, and book value is what they always considered as undervalued. Growth stocks, what are growth stocks? These are companies which the expected growth is above average rate. They typically have a higher market price because they're relative to their book value, but this is there because their growth rate is exceptionally higher compared to the average market. So this is the two factors which are considered in HML pharma equation. The factor calculates the difference between the portfolio of a high value stock and a portfolio of a low value stock. And it's used as this metric is called the book to market to determine the company's value. This comparing of the book value, that's the asset minus liabilities, and its market value, the stock price, is what you come to analyze. So let's talk about an example. Suppose you have two portfolios, one containing stocks of companies with high book to market ratio. Those are the value stocks. And another portfolio which you have stocks of companies with low book market ratios. That means growth stocks. So the HML factor measures the difference in returns between these two portfolios over time. And this can tell you, by seeing the difference between these two portfolios, which approach you should look at and focus on. Of course, this is not what Munger used, and this is not what Warren uses. But this is something which I wanted to touch upon because it is something related to this. A lot of you wonder, should I be buying companies which have potentially high growth, or should I be buying companies which are intrinsically lower in value? So which do I go through? But what Charlie says is very applicable today, that because of the information of this value investing has become so synonymous and everybody knows about it, trying to pick a value stock can be difficult. So I just wanted to touch upon this. There are other means and methods to looking at the stock market and options within the market, that if you do find picking value stocks very difficult, you can use these kind of pharma methods to assemble a portfolio of stocks which offer returns based on another factor. Warren Buffett's perspectives in all this. Well, Warren Buffett counters Munger's concern, emphasizing that opportunities arise from human irrationality. He says, don't worry about this. Yes, Munger's right. Information does spread very fast and people do chase. As soon as you say there's gold there, everybody goes running. But he says that is to your advantage. Why does Warren say that is to your advantage? Because many times people are wrong. Market is wrong. So when the market is wrong and the people are wrong, there is no gold there. But many people have thrown their money into it and there's huge loss there. He says don't follow it. He suggests that as long as people make financial decisions, there will be investment opportunities despite technology advancements. He's saying no matter what AI is there, whatever happens, he says opportunities will be constantly there because there is a human element. And whenever there's a human element, you can be rest assured mistakes will happen. This is what Warren's argument to Charlie's is. Why? Investment landscape evolves with alternative assets like what people would hate, like art, currency. Another principle as they buy something valuable below its market value and remains relevant. People do invest in art. People do invest in this currency trading. This is all way beyond me and my competency, so I don't do this. I don't invest in art. I don't invest in currencies because it's very difficult. But millennials like you and Generation Zs are exploring these different investment avenues. Explore. Do give me in the comments below what your views are on all this currencies. I know crypto is a very loaded word, so I don't say that word because I don't believe in crypto. I think it's a scheme, Ponzi scheme. But many of you have a different view on this. Just a mere fact I've mentioned it. I'm sure it will set off some AI bots who are going to get into the comment sections, and I'll have 20, 30 odd comments and threads of conversations happening about how money was made. Buffett views aligns with the idea that human behavior often leads to market inefficiencies and opportunities. People's financial decisions can be driven by irrationality, creating room for value-oriented investors. So how can I summarize all this? Been rattling on and on for probably a good 11 minutes. I've been keeping you guys watching this YouTube video, wondering what is that I'm going about. Well, in summary, investing world is challenging. Technology and alternate assets entering the scene. We do not know where it is, which is going to be the gold rush next. Where is no gold rush but a waste of time? We don't know that. However, the core principle of value investing and human behavior and search for undervalued opportunities continues to hold significance. Is the point of Munger and Warren. Both Munger's concerns and Warren's optimism highlights the evolving nature of investing and enduring role of human psychology in financial matters. So a lot of psychology is always involved in market and financial matters. That's why Anand always emphasizes on treating economic and market and all this as a social science, not as a pure science. Don't try to take this approach of equations, calculations, and etc. Try to see it more as how people react to news, how people have exuberance, and then people get swallowed and get motivated by fear. These things are always very important. Anyway, I hope you found this video interesting and informative as always. It was a bit long video than what I usually do when I'm by myself. Do share your comments and feedback below what you think about Charlie and Warren and these new investment classes which are apparently available for everybody nowadays. What do you think? Thank you for watching this video today. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.